Coleman's Small Business Banker Weekly Radio Show with your host Bob Coleman is brought to you by GovGex.com, the online exchange for sellers of SBA and USDA loans, and PCFS 2000, the leading financial technology services vendor providing software solutions to both the SBA lending and credit union industries.
Today we are talking with Paul Merski, the Senior Vice President and Chief Economist for the Independent Community Bankers of America out of Washington, D.C. Paul, thank you very much for joining us.
Glad to be with you, Bob.
Big issue in today's news for the past month has really been the difference between what community bankers are doing for small business as opposed to the larger banks. Care to comment on that?
Sure. Well, with the tremendous financial meltdown that we witnessed over the past year or so, banks, both large and small, are starting to climb out of that rut and are now in a better position to begin increasing lending to small businesses. And recently we saw where banks of $1 billion and under actually had, for the first time year over year, a slight uptick of about 0.5% in their net loans and leases. The larger banks are still trying to raise capital and recapitalize and are trying their best to do additional small business lending as well. So,
Paul, do you think that's a function of location, of being local, of knowing the community and knowing these entrepreneurs a little bit better than perhaps a larger bank, where they have centralized credit underwriting, 3 states away?
That's a very good point, Bob. A lot of the lending is basically based on the demand for lending, and we have pockets in this country that are still struggling, and the loan demand, quality loan demand, is just not there. And we have other areas of the country that are seeing a uptick in their small business loan demand. So what we hear a lot of is that the loan demand itself, because of the economic growth, is not that robust yet. It's only about 2.2%. The strong loan demand isn't there yet, but it's starting to creep back up.
You mentioned economic growth. What is the ICBA? What is your outlook on 2010? And let's be specific. Let's talk about small business.
Sure. It's still going to be a very difficult year in 2010, but it will be better than 2009. I think we'll have slight improvement.
Yes, thank you. Yes.
Slight improvement in the jobs market, but not much. A little bit of real GDP growth, probably in the 2 to 3% range, but it's still going to be difficult. And retail sales numbers that came out today for December of last year showed a decline. So it's going to be a struggle for many small businesses, and the good news is that the vast majority of our 8,000 community banks out there are well capitalized, have plenty of liquidity, and are actually looking for quality loans. So small businesses should really look to their local bank for all types of lending, and particularly SBA lending, as the risk environment is a little bit more difficult out there for banks to do lending. SBA loans come more into play, and we're very confident as Congress and the administration looks to work with the small business community that they're going to up the guarantees and reduce the fees going forward, as they did to help stimulate the economy in 2009.
I assume the ICBA is supporting what I call Stimulus 2, SBA Stimulus 2. Give us an update on that. Where are we in the process? What does your crystal ball say when the lender actually will start being able to make these $5 million 7A loans and $5.5 million 504 loans?
Sure, that's been a top priority for the House and Senate Small Business Committees. They've put those pieces of legislation to do just that on the table last year and passed out of the House. The administration is fully behind the effort. We've had very good data showing that the stimulus provisions of SBA programs are one of the bright spots in the stimulus package. So
definitely.
very confident that in the first quarter of this year there will be a bill passed through both the House and Senate that would extend those very beneficial Recovery Act SBA incentives, and we'll be well on our way to doing a more robust small business lending business in 2010.
Will the SBA portion of that draw bipartisan support?
You know, it's a very political environment this year, very partisan environment, and you know, a lot of legislation, good or bad, doesn't get bipartisan support. But
right.
I think when it comes to small business and job creation, that has support from many Republicans as well as Democrats, and the good news is that we can point to success in that area with these SBA lending programs and the gradual growth in lending through that. And the number one thing I hear from our community bankers nationwide is the risk environment to do small business lending has changed dramatically. It's much more risky to make a small business loan now than it was 2 or 3 years ago. They have tremendous regulatory pressure on them on much stricter underwriting standards on top of them. So the solution really for many of our community bankers has been to use that SBA loan guarantee, use the SBA loan program to increase their small business lending with a little backstop from a SBA guarantee program.
The 600-pound gorilla in the room, we all read about it, is the pending commercial real estate bubble crash. A lot of these SBA loans are real estate based. Obviously, 504 is almost all of it. Talk to me about that. How much of a risk is that for your members, and more importantly, how is that going to affect small business lending supply of capital for Main Street America?
Well, that's something that everyone is generally concerned about, the renewal of leases and a lot of commercial real estate. The good news is that it's a much smaller portion of the real estate market than we witnessed in the housing sector, the residential housing sector. Commercial real estate is a much smaller portion. And the renewal of these leases will take place over several years, so it's not going to hit all at once. It will be a difficult environment. I think our community bankers in particular have been preparing for this for a number of years now and have increased their loan loss reserves, increased their capital. So I think while it's going to be difficult, it's going to be something that we're going to weather through, and it's not going to be anywhere near as dramatic as the problems caused by the decline in housing prices. So while commercial real estate is a problem, I don't see that as a problem that's going to destroy the entire small business lending environment.
Paul Merski, ICBA, out of Washington, D.C. Paul, thank you very much for joining us.
Thank you, Bob.